Hi everyone, welcome back to Saheb Academy. Today in this 13th video of cash flow statement chapter, we are going to solve this 15th problem of our series. But this question is actually the illustration 10 from the ICAI study material, okay? And the special thing about this question is here they have asked us to calculate cash flow from operating activities only, but by both the methods, direct as well as indirect method. And another important thing is here we have got an adjustment of advanced tax. Okay, so it becomes a very important question for you. It's a simple question, it's a small question, but you have to understand here we have an advanced tax also. So let's understand how to do that. Okay, let's begin. Let's analyze the question first. Now see here, let's read this. Given below are the relevant extracts of the balance sheet and the statement of profit and loss of ABC Limited along with the additional information. So here we have been given an extract of balance sheets. Yeah, two balance sheets are there, 31st March 2021 and 31st March 2020. Current year, previous year, or we can say closing balance, opening balance, right? So we have to look from right to left. Okay, then we have statement of profit and loss, and then we have this additional information, the notes to accounts. Yeah, we'll see each and everything in detail. Now in balance sheet, first what do we have? First we have current liabilities, trade payables. What do we do of trade payables? In direct method, you all know, we see how much cash we have paid to trade payables. We create a ledger account to find that out, right? And then in indirect method, what do we do? It's a current liability, just working capital changes we do. It's an operating current liability, just working capital changes. Fine. Okay, so what is happening to this? From 230 opening balance, it has become 250. Trade payables is increasing. If current liability increases, we add it in the operating activities in working capital changes under indirect method. Fine, understood. Next, we have short-term provisions. Note number 1. In provisions, what do we have? Mostly, we'll have what? Provision for tax. What do we do with provision for tax? Ledger account. Let's star mark it. Okay, fine. Then we have other current liabilities. Note number 2. We have to check what we have in other current liabilities. If we see in other current liabilities, outstanding wages, outstanding expenses. Tell me what will happen of this. In direct method, you have to open a ledger account for both of these things, isn't it? And find out how much is paid. Okay, there will be data in P&L also. We'll come to that. But in indirect method, what will happen? Indirect method, these are operating current liabilities, right? You will take them in working capital changes. What is happening to them? From 40 it has become 50, from 10 it has become 20. Both are increasing. These are what? Current liabilities. So you will add this in the operating activities under working capital changes. Is it clear? Simple. Okay, fine, understood. Next, what do we have? So all the current liabilities are over. Next, come to assets, current assets. You have inventories. What do you do in inventories? In direct method. In direct method, you don't do anything regarding inventories, isn't it? Yes. But indirect method, what do you do? In indirect method, you take it in working capital changes, right? So what is happening to this? From 180, it has become 200. It is increasing. Current assets increasing means you have to subtract in operating activities. Okay, fine. Next, we have trade receivables. What do you do regarding trade receivables in direct method? In direct method, we see how much money we have received from trade receivables, right? That's what we do. And we take that directly in direct method. In indirect method, what do we do? Working capital changes. It's a current asset, operating current asset, working capital changes. What is happening? From 250, it has become 400. It is increasing. Sorry, there is a mistake over here. Okay, it is increasing. Fine, it is increasing. So if it is increasing, what we have to do? We have to subtract, isn't it? It is increasing by 150. Okay, fine. Then we have other current assets. Now, what are these other current assets? Let's check in the notes to accounts, right? It's note number 3. So if you come to note number 3, you come to know in this question we have got advanced tax. Advanced tax is like prepaid expense. It's an asset. Why it's an asset? Because you're paying in advance, isn't it? Liability has not become due in reality. You're paying in advance, so that is a asset. Is that clear? So it's given over here, opening balance, closing balance. This is the opening balance, this is the closing balance. Okay, fine. So what are we going to do about this advanced tax? We have to open a ledger account for this. Okay, and we'll see how to do that. It's really simple, it's not difficult. We'll combine the provision for tax and advanced tax together in one account and find out how much tax is paid. Okay, we'll see that. Next, let's go to statement of profit and loss. See, first, what do we have? Revenue from operation, sales. Okay, 4,150. Now, what are we going to do with the sales? We have to see in the adjustment whether the question has told us how much of it is cash sales or credit sales, isn't it? But if the question is completely silent, and that's the case in this question, then we are going to assume this 4,150 completely credit sales. If this is credit sales, then what will happen? In direct method, we take credit sales where in the ledger account of trade receivables, right? So we'll do that. Next, we have other income, note number 4. Let's check other income. What is there? Note number 4. See note number 4, other income, interest and dividend, income. So this is sitting in P&L. In indirect method, what we are going to do? We have to subtract it in operating. It's a non-operating income, no? We will subtract in operating activity and we will add in investing activity. But understand here, we are not doing investing activity, so forget about that. Yeah, you know the treatment of this. Then what do we have? See here, total income. Okay, that's just total. Then expenses, purchase of stock in trade. Okay, fine, 2,400. What do we do of these purchases? The same way, we have to know how much of these purchases are cash purchases and credit purchases. If the question is silent, what we do? And that's what is happening. Question is silent regarding that. How much of it is credit purchase and cash purchase? We assume entire thing is credit purchase only, entire 2,400. So what will happen of that? When we'll open the trade payables account, we will take the credit purchase to find out how much money we have paid to suppliers, to trade payables. Is it clear? Okay, fine. We'll make a working note for that. Then we have changes in inventories of finished goods. You all know it's a non-cash thing. It will not come even in direct method or indirect method. Is it clear? Okay, fine. Because in indirect method, what will happen? Even if though it's a non-cash, it's operating non-cash. So that's why it will not be taken in indirect method. Okay, we will not reverse this or something like that. What will happen is in working capital changes, we are considering the change of inventory over here only. Okay, we are considering that in working capital changes. So that is why again we will not reverse this and all. Is it clear? Next, we have employee benefits expense. Employee benefit expense means salaries and wages and everything. Yeah, whatever we pay to employees. So that's 800. Now understand, this is just an expense. And then in notes to accounts, we came to know there is outstanding wages balance. So that means we'll have to open a ledger account of employee benefit expense and consider both the things. This 800, yeah, this P&L item as well as this liability, outstanding wages, opening and closing liability. Okay, we'll open a ledger account and we'll find out how much employee benefit expenses actually paid. That much we'll take in direct method, and then in indirect method, what we're going to do? We are not going to do anything about this because it's an operating thing. We are just going to do working capital changes for outstanding wages. Is it clear? Okay, fine. Then we have depreciation expense. Regarding depreciation, what do we do in direct method? Nothing. It's a non-cash thing. We don't do anything. But in indirect, we add in operating activity. We reverse it. It's a non-cash item, right? Okay. Then we have finance cost. Note number 5. Finance cost means expense, the interest, right? So interest that is paid, right? It's expense. So what you do of that? You reverse that first in operating activity by adding it, and then you subtract it in financing activity, how much interest is actually paid. Okay, so that's what we will do, but financing we are not doing, right? So forget about that. We'll just reverse in operating under indirect method. Next, what do we have? Next, see other expenses, 200. Now, whenever they say other expenses, we always assume that is what? Operating other expenses. Okay, so in direct method, what we are going to do about this? We have to see how much of it is paid, and that much we will take in direct method. How we will come to know that? See, in the notes to account, they are talking about that outstanding expenses is there, isn't it? So outstanding expenses means that other expense only. So some of it is outstanding, so that we will open a ledger account and combine that. This P&L item also will take, and then this opening closing balance of outstanding expense will take, and we'll find out how much expense have been paid, right? And that much will be taken in direct method. In indirect method, nothing. We'll not do anything about this 200 in indirect method. In indirect method, only working capital changes for outstanding expenses. Is it clear? Okay. Then what? total expenses, it's over. Yeah, income minus expenses, we have profit before tax, NPBT. You see, NPBT is given in this question. If NPBT is given, then we don't have to do anything else, right? We don't have to start from retained earnings or net profit after tax and all, right? So see, next they have given us current tax. Yeah, tax expense, current tax. What do you mean by current tax? Current tax means the provision of the current year. Okay, tax provision of the current year, 200. We need this. Yeah, we'll star mark it because we have to open a ledger account of tax and take everything over there and find out how much tax paid, right? Everything will take in one single account. You will see how simple it is. Then say we have profit for the year from continuing operation, that is net profit after tax. Now this 510, this is what? This is NPAT. We don't need it. Okay, this is second priority thing, right? We don't need it because we have NPBT. We'll start from the 710 only. Okay, so if you are starting from 710, understand, we will not be reversing what? We will not be reversing the provision, current year provision. We will not reverse because we are starting from before tax. Okay, all right. Then afterwards, see, they have given us appropriations, balance of profit and loss brought forward. Not important because we are starting from NPBT. Transfer to general reserve, again not important. Yeah, these are the things that might have been considered if we would have started from what? If we would have started from retained earnings, right? But we are not starting from retained earnings, so just forget about that. Direct method also, indirect method also. In direct method, you never take it. In indirect method, you would have taken if you would have started from retained earnings. But no, we are starting from NPBT. Then see, dividend paid. Dividend paid is taken in financing activity, isn't it? So we are not doing financing activity, so forget about that as well. Okay, so you understood this whole question, the whole analysis that we did just now with direct and indirect both comparatively. Now see the requirement of this question: compute cash flow from operating activities only using both direct and indirect method. Okay, so let's just do that. Let's just first do direct method, then we'll do indirect method. Okay, but let's see the working notes now. Now see, here we have the working notes. It's really simple. First we'll start with trade payables account. Why is that so? See here, first we have trade payables now, so I started with that. Why are we doing this? For direct method, because we need to know how much cash has been paid to trade payables, right? So what do we take over here? It's a liability account. Opening balance on the credit side, closing balance on the debit side. Opening balance 230, closing balance 250. See here, buy balance B by D 230 and then to balance C by D 250. Is it clear? Simple. Then what do? Credit purchase will come over here on the credit side. Yeah, when you sell on credit, what happens? Trade payables increases. That's the logic. Yeah, how much credit purchases are there? Credit purchases are 2,400. Yeah, the question didn't say that. We are making that assumption. Always remember, if question is silent regarding cash or credit, always assume completely on credit. So 2,400 we took over here. Then what do? We just balance this account and find out how much money has been paid to creditors or trade payables, right? 2,400 plus 230, that's 2,630. 2,630 over here also. 2,630 minus 250, that's equal to 2,380. Is that clear? That's the money that has been paid to trade payables. What are we going to do about this? We are going to just subtract it in the operating activity, isn't it? It's operating cash outflow. Yeah, under direct method. Simple, easy. Next account is what? Trade receivables account, which is an asset account. Opening balance on the debit side, closing balance on the credit side. Why trade receivables I'm doing? See here, next star is on trade receivables. Yes. So see here, 250 is the opening balance and 400 is the closing balance. So say 250 opening, to balance B by D, and 400 is closing balance. Is it clear? Simple. Now, here also the same logic. Here also the question didn't say how much of the sales is, cash and credit, right? So we assume completely 4150, completely revenue from operation is credit only. So credit sales, where does it come? It comes on the debit side of trade receivables. Why? What's the logic? Because if you're selling on credit, what happens? Trade receivables increases. Fine, that's the logic. So credit sales will come over here, and then as a balancing figure, you will find out how much money we have received from debtors, from trade receivables, right? See here, 4150 plus 250, that's equal to 4,400. Yeah, so 4,400 here as well, and then you will subtract 400, you will get 4,000. That's the money that we have received. from trade receivables. What do we do of that? It's operating cash inflow. Money is coming in. We have to add it in the operating activities under direct method. Simple and straightforward, right? Now after this, what we have to do? After this, see here, and here I have written the note, okay? See here, whenever question is silent regarding cash purchases or sales, assume total purchases or sales are on credit only. Is it clear? Simple. Now after this, what do we have? After this, we have to open, see here, revenue from operations. Yeah, we have taken that. Purchase of stock in trade, we have star marked it because we had to take it in the ledger account, right? We did that. Then see employee benefit expense, right? So here also we have star marked. Why we have star marked? Because we need to know how much of employee benefit expense is actually paid. Because you know, in cash flow statement, the entire game is on cash flow. Direct method is all about cash flow only. We only see how much cash outflow inflows happen. Only we take that. So is entire 800 paid? No, entire 800 is not paid. That's what you have to understand, because the question has told us in notes to accounts that, you know, see the other current liabilities, note number 2, outstanding wages. Outstanding wages means it's directly connected to employee benefit expense only, no? So that is why we have to open a ledger account of employee benefit expense. Okay, so see here, employee benefit expense. It's an expense account which has debit balance. Okay, but understand here what we are taking. Here we are taking outstanding account which is related with that. Outstanding wages. Outstanding wages has credit balance. So that is why that balance will come on the credit side. By outstanding wages, the opening balance, which is 40, and closing balance is 50. So see, by outstanding wages, to outstanding wages. Outstanding wages is current liability. No, it has credit balance. So opening balance on credit side, closing balance on debit side. Is that clear? Simple. Then in P&L, how much do we have employee benefit expense? In P&L, it is 800. Yeah. So employee benefit expense, P&L, it will come over here. Because you all know now what happens when we close the expenses account. This is where we take it, right, by P&L. So that's the thing. So 800 has come over here. Is it clear? Simple. Then you will balance this account and find out how much expense has been actually paid. So 800 plus 40, that is 840. 840 over here as well. 840 minus 50, that is equal to 790, which is the actual employee benefit expense that has been paid, right? So it is operating cash outflow. What you will do? Subtract in operating activities under direct method. Is it simple? Simple and straightforward. Yeah, this is what you will do. After this, what do we have next? Next, see, we have what? After employee benefit expense, depreciation. Okay, that will not come in direct method. No. Yeah, then we have other expenses, isn't it? Other expenses. For that also we have to open a ledger account, isn't it? Let me just star mark it. Now see here, other expense. Why am I star marking other expense? Because there is outstanding expense. No, outstanding expense, it's related with that. It is related with that. So we have to open a similar account of that other expenses also. Okay, so let me just show you. Other expense account, the same logic. Other expense is also what? You know, debit balance account. It's an expense account, plus minus. But understand what is there related to that. There is a liability account, current liability account, outstanding expenses, opening balance 10, closing balance 20. So see, by outstanding expenses 10 and then to outstanding expenses 20. Is it clear? This is what you have to do. Always remember, whenever they give you like this and there is a credit balance account, then this is how you have to take it. Credit opening balance and debit closing balance. Fine. Then what? Then see the P&L. In P&L, other expenses was how much? In P&L, other expenses was 200. So that will come over here, 200. Okay. Yes. Then you will balance this account. 200 plus 10, that's 210. 210 minus 20, that's 190. So this is the actual other expenses paid, 190. So it's cash outflow, right? So you will subtract it in the operating activities under direct method. Is it clear? Simple and straightforward, right? After this, what you will do? You have done this also. Now after this, see here, what else is left? Is everything over? No, you have tax, right? Isn't it? Tax is there. See here, current tax, we have star marked it. And then in notes to account also we have other things, provision for tax, then advance tax, right? All of these things you will take together only, okay, in just one account. Previously what we used to do, we used to just open provision for tax account. You have seen that really simple credit balance account, opening balance, closing balance used to take, and then whatever current year provision is there, that you would used to take, isn't it? And then you used to find out, you know, how much tax is actually paid, right? The same thing you will do. It's just that you have to push, you have to stuff advance tax also in that account only. Okay, let me just show you. It's really simple. Okay, how many things we have? See, provision for tax opening closing balance, advance tax opening closing balance, and then you have current year provision over here, current tax 200, right? These are the things you have to take. So see, tax account, we will not be opening what provision for tax account. No, we are opening provision for tax account as well as advance tax account, both of the accounts in this one ledger account only. Okay, that's what we are doing. So see here, understand, provision for tax has credit balance. So opening balance on the credit side, closing balance on the debit side. I'm talking about provision for tax. Advance tax, I told you, it's like prepaid expense. It's an asset you are paying before the due date, right? Before the liability is due, you are paying it. So it's what? It's your money only. It's advance tax. Fine, it's asset. So it has debit balance. Remember that it has debit balance. Opening balance of advance tax will be on the debit side and closing balance of the advance tax will be on the credit side. Okay, that's all you have to do. Fine. And then current year provision, where you take current year provision, as usual, it will come on the credit side only by P&L. Is it clear? That's what you have to do. See here, the account. It's really simple. See what is happening in this account. What is happening in this account? Let's talk about provision for tax. Opening balance 180, closing balance 200. 180 opening balance, by provision, to provision 200. Is it clear? Simple. Then see, advance tax. I told you it's an asset. See, other current asset. It has debit balance, right? So opening balance 180, closing balance 195. Opening balance 180 on the debit side, 180, and then closing balance 195 on the credit side. Fine, by advance tax. Here two advance tax. Opening balance, closing balance. Okay, four figures are clear to you. This is what you have to do. And then regarding current year provision, where you will get current year provision is given in the profit and loss, current tax 200, right? Always remember, whatever that is given, no, regarding tax in P&L, in profit and loss, that is current year provision. Okay, that is not tax paid, that is current year provision 200. So take that 200 by P&L, current year provision for tax. Fine. What do we do of current year provision for tax? In indirect method, we reverse it by adding it only if we start from NPAT or retained earnings. But in this question, what we are going to do in indirect method, we will start from NPBT. So we will not do this. We will not do this. Is it clear? Simple, understood. Then see here, understand, we'll just balance this account. 180 plus 200 plus 195, that is equal to 575. 575 here as well. 575 minus 200 minus 180, that's the balancing figure, the advance tax paid. Okay, that's the advance tax paid. How much? 195. So this 195 we will subtract in the operating activities at last. It's same for direct method also, indirect method also. Is it clear? All the rest of the ledger accounts we did for what? For direct method only, but this is for direct as well as for indirect. Do you understand? See here, direct and indirect, we have to just subtract. Simple, that's all. Okay, we are done with all the working notes. Now let's just see the cash flow statement. Okay, now see here, we have the solution. Okay, ABC Limited, we are just preparing cash flow from operating activities under direct method first, right? You all know the format and everything. What do? We just do cherry picking, right? Whatever cash inflow and outflow is there regarding operating activities, we just take that directly. Okay, it's very simple. You all know the format and everything, right? See here, cash received from sale of goods, from trade receivable, from sale of services. Yeah, we just take that. Whatever payments we are making, cash purchases, trade payables, yeah, whatever operating expenses we have paid, wages and salaries we have paid, income tax that we have paid, we just subtract all that. That's all. Yeah, if any extraordinary items are there which are relating to operating activities, receipt or payment, that also we take over here, and then at last we'll get net cash from operating activities. Isn't it simple and straightforward? So here we'll start from the working notes, right? So in working notes, first what did we find? We found out, see here in trade payables, that we have paid to trade payables 2380. Yeah, directly cherry picking. This much money we have paid to creditors. Just take that. How much we have paid to trade payables? Cash payment to trade payables minus 2380. Okay, just take it minus. Okay, no format, nothing. If money is coming in, just add. If money is going out, subtract. Simple. Okay, then see trade receivables. From trade receivables, how much money we received? 4000. Just take that. Cash received from trade receivables plus 4000. Clear? Simple and straightforward. Then see employee benefit expenses. This account we made. Why did we do this? To find out how much it is actually paid. 790 we found out. This much has been paid. Payment to employee benefit. Yeah, I mean employee benefit expenses paid 790 minus. Clear? Next ledger account. In next ledger account, what did we find out? We found out, see other expenses. In P&L they gave us 200. Then there was opening closing balance. We took that. We found out this much has been paid, 190. So just take that. Other expenses paid 190. Is it clear? This is what you have to do. Direct method is really simple. There is no, no complication at all, right? Then anything else? Nothing else, isn't it? We have taken everything. If we see the question also, there is nothing else in the question, isn't it? See here, let me just show you. Trade payables, we are done regarding that. Short-term provisions, that's the tax. Yeah, so tax will be taken at last. Fine. Other current liabilities also we took, right? In other current liabilities, what did we have? Outstanding wages and outstanding expenses. Both we have taken, isn't it? Employee benefit expense and other expense, that's related with that only. Advance tax, we'll see that at last only. Yeah, tax paid will take at last. That's all. Then other income, interest and dividend income. Yeah, can we take this? No, this is investing activity. There we take it. We are just doing operating. I'm talking about operating. It's not related with the operating. Then finance cost, interest paid. Can we take this interest paid in operating? No, we can't. In direct method, we can't do it. It's supposed to be taken financing activities, but we are not doing financing activities. So leave that. Yeah, see the P&L also. In P&L also, revenue done. Other income, we saw regarding that. We can't take it. No, other income, this. Yeah. Then purchase of stock in trade, it's done. We have considered that while doing what? Trade payables, right? Changes in inventories, it's a non-cash thing. We can't take it. Employee benefit expense, done. Depreciation, we can't take it. Finance cost, we saw it has to go in financing activity. We can't take it. Then other expenses, we have taken other expenses, right? Not this, from the ledger account. Then yeah, it's all done. Tax and all will not do. Okay. Yes. Appropriation, no, nothing. So that's all. Everything is done. So what we'll do, we'll just make a sum. We'll just make a sum. 4000 minus 2380 minus 790 minus 190, that's equal to cash generated from operations. You all know, right? Then what do? We subtract the tax paid. That's all. Advanced tax paid 195. We calculated that, right? 195. So just subtract that. 640 minus 195, that is equal to 445. Net cash generated from operating activities. Is it clear? Simple and straightforward, right? This is all what you have to do. Now let's see indirect method. Okay, now see here we have cash flow from operating activities under indirect method. It's really simple. How do we start this? You all know we start from profit, and there are three profits. Yes, there is net profit before tax, NPBT, NPAT, and retained earnings. If the question gives you NPBT, then remember that's your first priority. You will always start from there, and that's what is happening in this question. If we are starting from net profit before tax, then remember we will not reverse tax provision or appropriations. Like in this question, we have transfer to general reserve, which is an appropriation. We have tax provision also, so we are not going to reverse that. Okay, we will start from, see, net profit before tax and extraordinary items, which is 710. Yes, in P&L we got that. So we will not reverse what? Current tax, 200, that's tax provision. And we will not reverse general reserve also, transfer to general reserve. Is it clear? Simple, understood. Then what? Then you all know we reverse non-cash and non-operating items. Now what are non-cash and non-operating items in this question? Here You all know in other income we had what? Note number 4. What did we have? See, here we had interest and dividend income. This is what? This is non-operating income which has been taken to P&L. It has been credited to P&L, added to P&L. We have to reverse. We have to subtract this. Okay, subtract 100. Fine. So let's just do that. See here, interest and dividend income we have to subtract. Is it clear? Simple. And then we have what? See, changes in inventories. Can we take that? Changes in inventories of finished goods? No. It is a non-cash thing, but we can't take it. Why not? Because understand, this is a operating item only. That is why. Okay, and we are already considering that the change in inventory, yeah, that balance, opening balance and closing balance, that difference, we are taking it in working capital changes, yeah, that current asset. So we will not take it again over here, okay, in non-cash thing. Is it clear? Yes. Then see, we have depreciation expense. Employee benefit expense will not come. Okay, depreciation expense. Depreciation is, you know, the most common non-cash thing. That's 100. So what you are going to do? It is debited to P&L, subtracted from P&L. So you will add and reverse it. You have to do opposite, no, to reverse. So depreciation will be added. Fine. Then what do we have? After depreciation, see, we have finance cost, right? Interest expense. Yes, how much? 60. Let's go to note number 5. If we go to note number 5, see here, interest 60. Yes. So we have to add it in the operating activity to reverse it, because in P&L what has happened? It has been subtracted, it has been debited, right? So see, interest expense we will add 60. Fine. Then after this we don't have anything that is non-cash or non-operating. Fine. Everything else is operating only. So now what we're going to do, we'll just make a sum. 710 plus 100 minus 100 plus 60, that's equal to 770. Yeah, this is called as operating profit before working capital changes. Then what do? You do working capital changes, right? So for working capital changes, what you have to do, you have to look into the question in the balance sheet, find current liabilities and current assets. That's what you have to do. So first you have trade payables. That's a current liability. What is happening to this? Opening balance 230, closing balance 250. Increase of 20 is there. If current liabilities increases, what do? Current liabilities and cash are positively related. If current liabilities is increasing, you have to add that, right? You all know that's the trick we use. So increase in trade payables, 20 add, right? Next, what is happening? Next we have what? Current liability, short-term provisions. No, that is for tax, no. So we don't do that in working capital changes. Then we have other current liabilities. Note number 2. In note number 2, you know, we have outstanding wages and outstanding expenses. Both are current liability. What is happening to both of them? From 40 it has become 50, and here from 10 it has become 20. Okay, both are increasing, both are current liabilities. So increase in outstanding wages and increase in outstanding expenses, right? So both will be added. Current liabilities increasing means positive impact on cash, so you have to add that. Is it clear? Simple and straightforward. After this, all current liabilities are over. Then we have current assets, inventories. What is happening to inventory? From 180 it has become 200, increase of 20. If current asset increases means negative impact on cash, cash will decrease. Okay, that's what we say. So increase in inventories minus 20. Is it clear? Next, we have trade receivables. So for trade receivables, what do? For trade receivables of the same logic, see here, current asset, what is happening? From 250 it has become 400, increase by 150. So again, current asset increasing means negative impact on cash, subtracted, minus 150. Is it clear? Are there any more current assets? See, other current assets are there. If we see in the notes to accounts, it's advance tax. No, we can't touch advance tax. Yeah, that has been separately treated. We made a ledger account. Yeah, we took there all the tax, provision for tax, advance tax. Yeah, we found out tax paid. So we can't take that in working capital changes. Yeah, that's basic thing. You all know that. So everything is over. Now 770 plus 20 plus 10 plus 10 minus 20 minus 150. That is equal to 640 cash generated from operations. Is it clear? Simple. Now what you will do? Once you get this, you have to subtract the tax paid. Yeah, the advance tax paid. How much was the tax paid? The tax paid was, yeah, the same working note only. Yeah, 195. You have to subtract in operating activities at last under indirect method also. See here, advanced tax paid 640 minus 195, that is equal to 445 net cash generated from operating activities. Is it clear? Simple and straightforward. Yeah, so this is what you have to do. Okay, can you see it, the whole thing? Yeah, take a screenshot. Simple, right? And then direct method also really simple and straightforward, not difficult at all. Take a screenshot. And then the most important thing in this question was this only, this working note. You have to understand what did we do over here. The same thing only, provision for tax account only, opening provision, closing provision. We got that from balance sheet. This we got from, you know, P&L, isn't it? Current year provision, current tax they told over there. And then advanced tax, opening and closing balance, this also we got from balance sheet. And then the balancing figure was the tax paid, right? In both direct as well as indirect, we will subtract it at last. Is it clear? Simple and straightforward. Yeah. And then these were the working notes, trade payables and trade receivables. And then here employee benefit expenses. All right, so that was all for this video. I hope you have understood each and everything. If you have any doubts or anything, please comment down below, or you can always message me on Instagram, and the notes will be available on our Telegram channel. You can just go over there and download it. Okay, so that was all. See you in the next video. Bye.